The stock market has been in a free fall. Our portfolio is going down and we're losing thousands every day. So in this video, let's look at some data to show us when the best time to get back in. What is up everybody, Gifford here, welcome to another video. So today we're going to look at what the market is doing. So predominantly it's going to be at SPY. Then we're going to have a look at what the VIX is also doing and compare that to the last 10 years. And hopefully we can get some sort of idea of where that will take us in the market today. We're going to answer the question, when is the bottom? And then also, when are we going to buy again? So looking from this graph here on the 4th of April, the market is down by 13.57%, and it's a pretty sharp decline. And this is obviously politically driven, as you can see from the news of what's happening with the tariffs, and this is driving the market down because of all the uncertainty. So moving on from that, I always have to look at the VIX and when everything starts to go haywire. This tells me when the bottom could be in, or where there's opportunities in the market. So the VIX just measures volatility and usually is a good time to buy when it's coming up like this. So here in the last 20 years, you can see that we've had two big massive spikes in the last decade. So obviously, or the last 2 decades, obviously if we have a look here, this was in the global financial crisis and the VIX got up to 79, excuse my rough writing there. And also in this one here, this was the pandemic, so that got up to 65. And we can see here in the 4th of April, the VIX got up to 45. If history plays out the way it usually does, this tells us it's a very good opportunity buy when the VIX is really high. And that's what I'm going to be doing. Now, exactly when I will buy, I'm not too sure yet, but let's have a look at some more data. So the big question is, when will the bottom be in? So here's an article here that says 3 ways to tell if your stock has bottomed. This is all pretty good and I have read this, and what I'll do is I'll put the link to the article down in the description there so you can give it a bit of a read. But honestly, I'm going to tell you straight up, no one knows when the bottom is, because if they did, then we'll all be rich, right? We just put it in the bottom, the stock market will go up, but it doesn't work like that. So from my experience in the last 5 years, there's a couple of ways you can really look at this. You can dollar cost average, however that only works in a specific way, and that is going into funds. So you buy a particular fund. I recommend VT, which is a world global fund. Now you can go for the US, but obviously that's concentrated in the US where all the problems is happening right now. So if you want to take that risk on, it's quite a bit of risk, right? However, dollar cost averaging, just make sure that you are buying when it's low, when you're buying when it's high, but you have to do that strategically, which means every week you have to do that, or every couple of days you're buying some stock. That is dollar cost averaging into the same fund. Now that works. So the second one that people say is you can do dollar cost averaging into companies. Well, that does work when you have tensions like this and it's high volatility. This is a very dangerous game because you don't know how long the companies will go down in the stock price, and meaningfully it doesn't matter really what the ratios are, because when there's uncertainty in the market, it's just going to keep going down anyway. And if people are scared, they'll just get their money out, including big funds, right? Big funds are the ones that run the markets. So to me, while dollar cost averaging into big companies sounds like a great plan, this is not really something I follow anymore. So this leads to the question, when to actually buy again. You've got some money and you want to buy in because you want that to appreciate when things get better again. And here we have this ugly chart where we can see the massive dip in here, okay? To me, with 2 portfolios, one where I dollar cost average into funds, and my other one which I'm trading with, all I'm going to do is just wait. I've got money in the sideline. I'm just going to wait till there's a reversal. There's no hurry to buy at the moment. The market is absolutely tanking. So to answer the question, when will I buy again? Basically, the reason why I'm waiting is because of these 3 lines, these 3 simple moving averages, okay? Right now, we're at a downtrend. So if the market does come up again, I'm going to wait to get confirmation, which means the stock price has to be over these lines before I will trade them. Now, I can understand it's going to be at the bottom here. I'm going to miss out, but that's okay, because see this dip, you don't know how long this will last. This could come back up really quickly and everything will be okay again and it's not a problem, or it could keep heading down. No one knows how far the market is. Now, if you're thinking, right, I might miss out on this big opportunity, that's fine, okay? I just want to show you something. If we head over here and just sort of make this bigger, this is the danger. So this was back in 2023, so only 2 years ago. Look how long the run lasts for. This here can actually happen on the downside. It's very real. that these here, while we're looking up, see how it kind of comes up, passes the lines again and keeps heading back. That can happen here. You don't know how long, and you could be losing a lot of money. If you dollar cost average into these dips all the time, you are gonna get destroyed, because you will run out of money because you won't know how long this goes for. Let's just have a look at this. Okay, this bit here is a downtrend, right? So if you're dollar cost averaging, you're going to be getting highs and lows, highs and lows, highs and lows, and eventually coming down. Why not just wait? Because it's my trading account, I will be waiting. This is picking up on good companies when it's actually down. This is different from dollar cost averaging into funds. Okay, it's a different strategy. So with my trading account, I'm just going to wait and buy when we're in an uptrend, sell when it hits my stop losses, because I don't want to be holding on to stock when it goes down this far. Okay, there's opportunities to make money. There's one right here, look, goes all the way up. Sell here. You've made good money when it comes through here. Or if we go forward, we can set up some stop losses, but see, there's still money to be gained on this run here. Not a problem. And even getting these runs here, this is gonna be very good money. Look at these. That's gonna be good money. It does touch down a couple of times here, so I could probably get kicked out, but there's still money to be made as it's coming up in here. There's no need to hold stock when it's getting smashed like this, like my one. So I hit a few stop losses, and that's okay with me. And I can assure you, I'm not worried about paying the tax on these gains because I do not want these massive dips in my portfolio. This is the mistake I had before by holding on to bad stock, or not really just what's happened to them and then falling. They weren't really that bad. The business was still okay. It's just the current climate of the stock market. So what am I personally doing? Well, this is my Interactive Brokers account. You can see here, this is a screenshot of it on the 6th of April. You can see here that I'm in a lot of cash. So as I said before, I'm just waiting, happy to do a few trades here and there. See, there's not really much on here. There's not a lot of money but we can see that I've realized some profits. Now this is when my stop losses hit because I was already in gains and I wanted to protect them. So they're in there. I have some unrealized, some small unrealized profits in there, but you can see that the overall cash in US dollars is 21,000.6, and then I have a total portfolio. So this is pretty close to, or if not 40,000 New Zealand dollars, all pretty much cash ready to go when it reverses. And then this is what I do with my trading. And if you've watched my other videos, what I do is every month I take some money out of this and put it into my Sharesies account to buy some funds there, namely USF and QQQ, and that's what I'm going to be doing in the near future. So just to summarize, no one will know when the market will bottom out, and this is just a reminder to have an investing and trading plan that you've worked through, understood, and now you're executing on that plan. And just remember, this is what I'm doing and I'm sharing. This is not for you to be following what I'm doing here. I want you to manage your own money. I don't want to be losing money for you, and I'd feel pretty bad if I did. If you're following my trades, I lose my own money and I gain my own money as well. Otherwise, hopefully you enjoyed the video. If you have any questions, put them down below and I'll do my best to answer them. Feel free to use my referral codes to help me out. If you want to hear from me every other day, feel free to come over to Instagram. I post there, pretty much almost every day about what I'm doing in the stock markets and also my trades as well. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Hit like and subscribe, and if you want to help me out, just watch the video a couple of times to get those watch hours out. I'm trying to get monetized, so it'd really help me out. If you want to see my whole portfolio and the different strategies that I'm running, click this video right now and I'll see you on the next one. Goodbye.